Hi, everyone. Welcome to another KE Report webinar hosted in conjunction with Focus Communications. My name is Corey Fleck. I am your host for this webinar. Also, your host over at the KE Report website, our podcast and radio show, focusing on investing primarily in resource companies. In this webinar, we are featuring Freeman Gold, traded on the CSE under the symbol FMAN and on the OTC markets under the symbol FMANF. Also on the Frankfurt Exchange under the symbol 3WU. I am joined by the Executive Chairman, Paul Matysek, as well as Will Randall, the President and CEO. Just to bring everybody up to speed, Freeman Gold is focused in Idaho with its flagship Lemhi Gold property. This property already has a resource estimate on it that was released in July of 2021. Paul, Will, let's start off with this presentation. I do want to let everybody know that I will be interjecting questions throughout this presentation. You all have the ability to ask questions by using the chat or Q&A feature within this platform. Please feel free, ask whatever questions you want. We're going to try to get to as many of them or all of them. If we don't get to all of them, I'll be bringing these guys on my show in the near term to follow up on news and also answer some of your questions. Paul, Will, start us off, please. Give us a quick little rundown on Freeman Gold.
All right, great. Well, thank you very much for the intro. Fantastic. So quick intro onto the company. We've been around, fairly new company, hence this is more like an intro call. What we've done so far is we acquired the Lemhi project, which was drilled off primarily in the 80s and the 90s by a couple of companies that were looking to develop it and mine it, primarily the oxide portion near surface. We then got all that drill data, which was over 70,000 meters of drilling, and compiled it, analyzed it, and conducted our own drill program towards the end of last year. That was about 7,000 meters worth of diamond drilling. And based upon those results, where we had some stellar intercepts, such as you see here on this slide, 3.4 grams over 50 meters. And bear in mind, this is from surface within oxidized material in Idaho, as the intro said. We now then, compiled an initial resource estimate, which between all categories, indicated and inferred, sits at around 1 million ounces at just over a gram per ton, which puts this deposit into one of the highest grade oxide, potentially open pit deposits in the world, let alone in the US. So great jurisdiction, high grade. And as you go through the presentation with us, I hope it become apparent how this is wide open on strike and at depth. We haven't reached the depth of oxidized material yet, so that's another one of the great positives of this project. The initial met testing that we did it all the way down to 200 meters and covered a good extent of the deposit as well. And we consistently get recoveries over 95% using traditional CIP, CIL, so basically column type leaching. So this is great in the sense that now in our next drill program, we'll be able to grow this not only on strike, but also at depth and still maintain hopefully the same recoveries. We own 100% of the project. That was it's one of the key aspects here, and it's also primarily located on patented ground. If you're familiar with how the U.S. system works, patented claims mean that we own the mining rights, but also the surface rights, and hence a huge amount of flexibility and optionality when it comes to how to permit and develop this property. And then the management led by Paul, who's here, who will take over on the next slide. We've done this a few times before. We recently announced a US 13 million private placement, which is set to close over the next few days, which will leave us in a great cash position to drill out the property more aggressively, develop this in the time frame that'll make Paul happy and deliver value to shareholders.
Paul, let me quickly hop in here because one of the questions that was coming in real early is you joined the team, the company, at the very beginning of September of this year. What drew you to this team? What got you excited to come on board here?
Well, obviously, working with the likes of Will, he's a very good CEO and communicator and scientist. And I also work with a good CFO, Bassam Mubarak, who's been instrumental in my previous deals. But if you can see that chart there, that represents our team's work in developing projects and selling them in the public market. And I think it's probably unprecedented to have, and that started in 2007 when I had more hair on my head, and so did Will. And and really, if you look at any one of them, like I was one of the first people to look at the uranium boom in 2007, and probably the largest landowner of uranium resources in the States. And in the space of 3 years, we managed to get a huge resource, actually find a project that has mineable uranium on it that we mined on Palangana, Texas, and we managed to get on the New York Stock Exchange and took over 3 companies and eventually sold it to Uranium One for $1.8 billion worth of their shares. And if you look at, if we just move on, and the next one was actually Potash One, the commodity, and the same thing as uranium, same thing with lithium, same thing with potash. I tend to pick metals that are on an upswing. When energy metals started, the price of uranium was $10, and at its peak, it went to $110. Our stock went from 5 cents you could have bought it at. We sold it at $19. Potash One, a similar thing. I thought that the world needed more potash. Every 20 years, one potash mine goes in production. And, I found an area in Saskatchewan. It's the Saudi Arabia potash. Drilled 3 holes, found a huge resource in the space of 3 years. Managed to get a PEA, a pre-feas, a feasibility study, get it permitted, and then sold it to K+S, a German company, for cash for $434 million, like in the span of 3 years. And another characteristic of all those sales that you see out there is that I picked properties that eventually become mines. Okay, so Potash One, the legacy project, became the legacy Bethune mine, where K+S spent $5 billion putting that in production. Okay, if we move on to the lithium, I think I was one of the early adopters of lithium in 2010. I thought, well, the future is going to be lithium, and we should really get into this. And so we went to Argentina, and that's where I met my illustrious CEO. And I managed to go to this area where it's called the Lithium Triangle in Argentina, and staked part of the largest and best salar in the world, Hombre de Muerto, and managed to sell that company to Galaxy, who then used those assets and to become $1 billion company. And they sold half of the lithium of Hombre de Muerto to POSCO, a Korean consortium, for like $400 million US just recently this year. And I did another sequel in Argentina on the property that Will used to run in Argentina, and sold at the next view for $265 million for cash. So, and I've also had experience in obviously selling gold mines. So Gold Rock in 2016, it's in Argentina, a heap leach deposit. A lot of similarities to this one here, oxide, project. Much more difficult jurisdiction at 4,000 meters. And I managed to sell that to Fortuna Gold within a space, this was about 4 years. And now they're in production. So if you ask me what, the secret sauce to the success would be, is to find a commodity that you think is going to have a cycle. So like uranium from 10 to 110, potash from 100 to 1,000, gold from 1,200 to 1,800. So that's good. Find good properties. That's the key to it. Find a good asset. And then find the things that will unlock its value. The feasibility, finding water, the permitting. Do all the things that you can do. And this is not rocket science. It's just persistence and working on it every day. And remember, time is money. So for me, it's trying to get, put a team together that works together and try to get this done within the cycle of the commodity. Like they're 3 to 5 years. They're not long commodity cycles. And then, I think the next potash one will be in 10 years or 15 years. Look at uranium. It's now coming in for another encore. But, from 2008, and it's been dead, right? So those are, and I saw this. So coming back finally to your question, I saw this in Lemhi, and we're in a great jurisdiction. It's on a great oxide deposit. It's open-ended. So our role is to develop a resource, of up to 2 million ounces. It's highly attractive. The Great Basin's a great area. We think that we can do all the things to try to get it permitted, and would be very attractive either to take it forward and mine it ourselves, or sell it to or joint venture it. And I think that the time horizon of 2 to 3 years to do that is quite easy to do all the work to get that done. And in the first part, the biggest part was just a couple of weeks ago when we said we need $13 million to actually execute on this program. And probably in the next couple of days we'll announce the closing of this deal. Okay, and so we'll have the cash to actually execute on the drilling program, which we'll talk about for the rest of the presentation, and take it from there. And if gold has a run, then this would be one company you'd want to look at.
All right. Well, Paul, thank you for that background. Look, you have a lot of success with this team creating liquidity events for shareholders, selling companies. Let's talk about how you guys are going to go from what now is a 1 million ounce resource up to 2. Let's take us through what some of the catalysts are going to be.
Yeah, great. Absolutely. Just first sort of introing the project, kind of where it is for those who are not familiar. We're in Idaho. As you can see, we're in that portion of Idaho just north of where Revival Gold is. And in our state, there are a lot of very successful gold developers and producing mines in various commodities. Pro-mining state, I would say top 3 in the U.S. that you would pick to develop a mining operation. So to answer your question, what we plan to do, quick recap of what we did do. We drilled 7,000 meters, maiden resource estimate, just over 1 million ounces at a gram. We did that at a fairly high 0.5 cutoff, and we'll go through reasons for that. And covered a very large property, which is around 30 square kilometers, with geophysics and prospecting, and discovered 11 targets, of which one we're actually drilling right now and that we're really excited about. So we'll go over that in more detail as well. The phase 2 drill program is, go ahead. Oh, I thought I had a question. So phase 2 drill program is what we're referring to. We set it off at an initial 4,000 meters. We're probably going to be up in that as we drill throughout December, January as well. We're going to test the beauty zone and then focus primarily on the Lemhi deposit, expanding it on strike, and one hole at depth as well to see how far exactly this oxidized material extends down to. Always with the mind increasing this, as Paul pointed out, to somewhere in the 2 million ounce range, where it really gets a critical mass and becomes really, really attractive.
So how close to surface right now is that resource? How deep have some of the drill holes been?
Yeah, so we go right from surface down to about 230 meters, roughly, is our deepest hole. So not very deep yet. And we have encountered mineralization all the way down to depth.
Okay. So that's why that deeper component's still in play too, hey? Because you have been hitting mineralization the whole way down.
That is correct. And we'll get into this a little bit later on. You'll see a cross section, but these are roughly parallel horizontal structures that repeat itself at depth. So all we got to do is keep hitting these structures, and it just keeps going and going down as we keep drilling.
Okay, thank you.
So yeah, so our cash position that you see here on this slide is pre this announcement, and that's in Canadian dollars. So when we do close this US 13 million that, as Paul pointed out, should be happening over the next few days, we're going to have somewhere in the order of 18 million Canadian to execute, and to do it in the time frame, as Paul was pointing out, it's very important for us to get and execute in a cycle, get it done as quickly as we possibly can. So adding more rigs, getting the permitting underway, understanding the metallurgy more in depth than we do right now, and then compiling all that in a PEA or an economic analysis to really sort of highlight what we think this project's benefits are. And remember, these projects are very high margin because of the oxidized nature of the gold, typically, and low capex. For something that's producing, 80,000 to 100,000 ounces a year, rule of thumb is around 100 million market cap. So, something that's well in the wheelhouse of a company of our size.
Any large shareholders that you guys can tell us about? We see management insiders own about 20%, but comments popped up here that Yamana is also a major shareholder. What can you give us insights into this?
Yeah, Paul, I don't know if you want to comment a little bit more on who will be our shareholders post this, but yes, Yamana owns just under 5%, but we have some really key shareholders becoming involved too.
Okay. Yeah, I would say stay tuned for our new announcement on the financing early next week, and you'll find some quite impressive groups that have joined in on the $13 million financing. Names that you'd know, names that are quite supportive of our golden future.
Okay, thanks, guys. Let's keep it going then.
All right, that's great. Yeah, so again, here we're going to what we drilled to date. So yellow colors that you see there on this drill plan map are our diamond drill holes. And the rest were drilled in the 80s and the 90s by the likes of Meridian, FMC, and AGR, so major mining companies looking to develop this. So I guess the takeaway here really is we inherited a lot of data. This is not a project that was just started to be advanced over the last year. We have baseline data. We have decades worth of information in the permitting, drilling, and metallurgical aspects that we've been building on. When we started off the project, we knew it was going to have, well, we hoped it would have something over 800,000 ounces close to surface. And we achieved that goal just with this last drill program. And as you'll see on this cross section here, this is kind of what the structures look like. You have an intrusive coming off from the east that remobilizes a lot of the liquids and deposits the gold along these pre-existing horizontal structures. So that's why you see the red, which are the higher grade, red and orange, which are the higher grade blocks, kind of stacked on each other as you go down and up. But just as importantly, you can see that we have zones wide open here on strike. I mean, the last drill holes have very significant intercepts in it still. So that's really going to be the focus of our drilling going forward. The more economic ounces are the ones on strike. And then, of course, as you can see as well, it's open at depth.
And I might just add to that comment, most of the drilling on this deposit has been by reverse circulation and make these little chips, and it's very difficult to get very much. In fact, it's impossible to get any structural information. All the work that we're doing now will be diamond drilling. We'll get orientations, and there's a structural component. It's very fault related. We'll be able to, when we make our resource, we'll be able to be a lot more specific about areas because of the nature of the type of drilling that we're doing. So, you know, we said that before we announced the finance, it was a 4,000 meter program. It's probably going to be more like a 15,000 meter program when it's all said and done. So we'll really look toward, you know, right now, reclassifying our resource so that we have more confidence in it and expanding it to both ways. And, you know, maybe there's a likelihood, we'll talk about the beauty zones in the next couple of minutes. Maybe there's even an inference there that you may be able to connect the two.
And overall, too, guys, a quick question that came in. The target, it's oxide material, right? You've been hitting oxide. You're focused on oxide.
100%. And the reason, you know, oxide is a lot cheaper. You get a lot higher recoveries than you would get in traditional like heap leaches, and it's quick. So it doesn't take you like a month or 2 months or 3 months. It's like 4 days. Mm-hmm. So there's a lot of benefits having oxide material. Well, it's the most attractive one to look for in this day and age.
Yep, absolutely.
100%.
Thank you.
Yeah. Another aspect to bring up here while we're on this slide is you can see there's a very large amount of high-grade material right at surface in what you can envision when we come to modeling how to mine this. You can envision those being the first few years of production. And those type of aspects are what I find very attractive of this deposit. You can see 3, maybe 2, 3 years of high-grade production with very low strip ratio. So that's going to do wonders for your economics of the project. So when we do publish our IRRs and payback periods, we think or we hope that they will be very attractive. So our resource, as you can see here at a 0.5 cutoff, we have 750,000 ounces at a gram in indicated category and another 250,000 ounces at the same grade in the inferred category. More likely, as we go through a metallurgy and engineering process, we will be dropping the cutoff grade. 0.5 for this type of deposit is higher than most mines operate at, let alone have a cutoff at. I would say something of this quality tends to be between 0.2 and 0.3, maybe closer to 0.3, and hence why we have that number highlighted there. So, you know, it is actually a larger resource than that million ounces. We chose 0.5 because at the time of doing all this, we didn't have our MET results yet came in. So we didn't know where we were going to come in as far as recoveries, and that's obviously one of the big elements of your cutoff rate. Since then, we've been able to test the metallurgy down to about 200 meters and on a fair extent on strike, and we're consistently getting really good recoveries over 95%. So now we can confidently talk about expectations of lowering the cutoff grade down to 0.3.
Now, there are mines in Nevada that are mining 0.23, 0.24. It's amazing. And, you know, so, you know, with our step outs, you know, we could quickly increase the tons of the resource. So we're very excited about this upcoming program.
So that reference to Nevada, guys, is this a similar type of deposit that we would see in northern Nevada, these layered mineralized systems? Somebody's asking that if there is similarities here.
This is an intrusion-related deposit, so the geology is a little bit different, but we expect it to act very similarly, so have similar economics and similar economic parameters around it.
Okay, thanks.
Yeah, here we put Dean put together, our VP Exploration, who's done a fantastic job on site with the drill programs and getting us ready for this up and running program right now. We put together what we thought of the highest oxide deposits around the world. we started off with trying to do it just in the U.S., but we realized that we didn't have all that many comps, and we were right at the top of the table. So we put in, around the world, and as you can see, we rank in the top 10 worldwide for grade in oxide deposits. So get that and put it in the U.S. in one of the best jurisdictions out there in the world, and not a lot of work done as far as growing this on strike and at depth. We think there's huge upside here.
Guys, why was there a lack of work done here? If these metrics and the highest grade oxide resource here, I realize you came out with the resource, but why wasn't more of this followed up on in the past?
You're more familiar with history, and it's an interesting one. Well, go ahead.
Yeah, so this has, like a lot of these deposits that have been around for a little while, has a history that's a bit like a roller coaster. But a lot of this was heavily tied to what's now Revival Gold, the Bear Track mine. And the Meridian, who ended up owning and operating the Bear Track mine, saw this as coming on stream once Bear Track ran out of oxide ore, which it eventually did. However, in that period of time, Meridian discovered El Peñón, which then became Yamana Gold and one of the best gold mines out there. So instead of focusing on developing Lemhi, they actually focused their resources on developing El Peñón down in Chile, and the rest kind of is history for them. They've done very well. It's become a resounding success. But it did mean that Lemhi kind of got forgotten and no longer had the critical mass and the ounces to make a difference to a Yamana, right? And therefore got divested into a private group that really didn't do much with it. They had a lot of assets in the real estate, and not this was their only mining asset. So once again, they focused on developing their real estate portfolio and not this one until they decided to divest this through a bit of a process, which is where we acquired it.
Okay, perfect. Thank you. Let's talk about this blue sky exploration potential. That's what I know a lot are excited about.
Yeah, absolutely. So we think that Freeman has a great growth in it just on Lemhi alone. So this is, to us, it really is blue sky. Like anything that happens here is for us is extra. But we started exploring this and we walked the ground, and as you can see, we did geophysics, and we realized that there were no drill hole colors, nothing had been really overturned, no rocks had been banged. So this had gone totally unexplored, despite having this, fantastic resource right in the middle of the claim block. And as a result, you can see there's gold everywhere. Number of areas that we discovered that have gold at surface, all the way to 400 grams per ton. And we had to sort of come up with what our best targets, and we came up with 11 of them. As you can see, some are surface showings, some are geophysical, and some are structural. We have that target 5, which is a Lemhi lookalike, in the sense that they're two intercepting structures and a geophysical anomaly. And then, of course, there's target 1, which has then become our beauty zone, which is what we think is probably a more attractive surface showing. That's the one right there. We've highlighted the beauty zone here, and you can see all the other targets around it. What makes this kind of key is you can see on the photograph on the top right, it's a silicified, so altered hill, where pretty much every sample we took in that hill ran over a gram per ton. 28 samples ran over 10 grams per ton. So we're talking some really high grade material, totally untested. This has not been drilled before. If you take the time afterwards on the website and zoom into that picture, you'll see that we've done some trenching in and around it, and we're now drilling it. So the bottom picture is our drill right now. We're on that first hole, and we feel really confident that we're going to get something there, and that's all upside. As you can see, it's 600 meters, 700 meters west of Lemhi proper. And as Paul was pointing out, if we do get success coming off the hill, because it's all undercover between there and Lemhi, it's all undercover, so we have no idea what there actually is. But as we drill down off that hill and towards Lemhi, there may be the possibility to actually connect it and make it one single resource.
Now, how many meters are you guys planning on drilling just at this beauty target?
Probably about close to 500 to 1,000 meters in that area. So it's then we're going to move on to Lemhi to drill a deep hole, which we talked about that, and just for the extensions to see how far this resource might go, and then with the extra money that we have, do infill drilling to solidify the resource. So another thing to add about this is that you can drive to this property. Okay, this is not at 4,000 meters. You can work all year round. Okay, you can stay in a hotel. So in terms of infrastructure, water, it's well located, and and it's a community that we've got a lot of support in what we're doing there.
Okay. Well, and this beauty target or beauty zone really is this blue sky exploration potential, right? I know you have a bunch of other targets, but this one, you are testing it. You'll be able to find out with that, let's say, around 1,000 meters if it warrants follow-up or not.
Yes, I mean, this morning on a teleconference call, our VP of Exploration, like Joe Namath, guaranteed will hit some gold in this area. Okay, so good number 7. He's got to hit something. Yeah.
All right, thanks, guys.
So here's the full 4,000 meters. So as Paul pointed out, we have 3 drill pads that we built there at the beauty zone. We're drilling 3 holes off of one of the drill pads right now, kind of like a fan, just to see what's going on. There is, much like Lemhi, there's a lot of structure at beauty and a lot of gold as well. So that'll help us figure out that. And then we'll go on to Lemhi proper. And if you can see where those red colors are in relation to sort of the extents of mineralization, they're right on the edge. And what that means is we're trying to expand this on strike primarily. These are typically between 40 and 90 meter step outs, which means we're going 40 to 90 meters beyond the last known drill hole with mineralization to try to bring additional ounces out that way. And this is the kind of the approach that we're going to take initially beyond the 4,000 meters, as Paul said. And then at the same time, as you notice, we have about 30% of our resource, 25% in the inferred category. So we will be doing some infill drilling there as well to bring what is already known, all of it into measured and indicated. And the one hole that you see right in the middle of that zone kind of is the one that we're going to drill deep. So we're planning to go to about 400 meters and really see if that stratigraphy, if those structures that we were pointing out on that cross section do continue and repeat at depth. Bear in mind that at the nearby Bear Track, Revival did find that this does continue at depth. They have mineralization all the way down to somewhat like 400 or 500 meters below surface. So that's only about 30 kilometers away. So we have, high hopes that we'll be able to increase this resource at depth as well.
Okay. And you can see that by the outline of the patented ground, we can expand north to the north, to the south, and to the west. So we've got and that means we can start drilling any time on those properties, on those areas.
So guys, using this map, are you intending on acquiring more land? Are you going to be building more of this land profile?
So you can look at that. That is, we own all that land that you see in that photo. Okay, that's just the differentiating. We have a slide that shows the entire extent, which is this one here that you can see.
Actually, the next one too. No, you're right. Let's go back.
Yeah, go back. One more.
There you go.
So you can see the outline in brown is the patented ground, and the outside is what we actually own. 30,000 hectares. It's a huge land mass. Okay. The patent may make up maybe 15 to 20% of the entire area. Okay. So we focused on that area, and we're fortuitous that the deposit's there. And it's on patented ground, so it's easy to develop. But we have applications in pending to actually drill all the other, get drill permits and rock sampling permits in those areas outside the pad.
Okay. And so I guess just to summarize, when it comes to drilling this year, the focus is going to be around the resource, even within the resource with some infill drilling, a deep hole, as well as the beauty zone. Is there anywhere else that you guys are going to be drilling, or is that the focus?
No, that's the focus.
That's the focus. We will look outside, but we think that we have a deposit we can grow, and we'd like to do this in a timely manner, and that's why most of the company, in fact, all the companies I've ever ran have been single asset companies, and so that we don't have a split focus is one thing we wake up every morning to do, and I really like that aspect of it.
Yeah, and going back to your land question there, so when we bought this asset, we didn't actually own a couple of claims that were kind of key. So that took us a while. It took us about 6 months, that little sliver of claims right in the middle of the resource area. We didn't own that. So that's an acquisition that we made, and we had to tidy this up. So that's very much the way we try to work projects, and Paul's the one who taught me this, is de-risking it step by step. It's not rocket science, but they're all steps you need to do, and property ownership is the first one. That's, you need to consolidate the area, consolidate the ownership, get as close to 100%, which we did, and that took us about 6 to 7 months before we got going. So
yeah, well done. It is important. One of the main aspects: own the land.
Own the land. Yeah.
It's often overlooked, but that's the most important step that you make.
Mm-hmm. Okay, moving on.
And so the Met, we've implied this. So going back to when we acquired and we got involved in this asset, and one of the big unknowns was Meridian, based on their experience in Bear Track, was looking at this, basically the top 100, 120 meters to mine. And typically, you would have thought that beyond that, we'd have a transition zone and it'd be a lot tougher to leach, right? More sulfide ore. So that was one of the big unknowns. It was a very pleasant surprise for us as we went through our MET program over the last year to find that this metallurgy, that it still leaches all the way down to 200 meters. So that opened up a huge amount of the resource and a huge amount of value for us, and allows us to explore, each section that we add. So 40 meter step outs, instead of adding 100 meters of potential gold, we're adding 200 meters, right? Or 250 meters. So the resource expansion possibilities per drill hole are much greater thanks to this, and the overall resource too. Our phase 3 is underway, and what we're doing is we're expanding on strike and also at depth, just to get a little bit more idea to see if this is actually consistent throughout and if there's small variabilities, copper content, etc. But we feel very confident that what we have now is fairly representative.
Paul, take us through just how important this is. We talk about metallurgy a lot, and I know it's kind of one of the boring aspects for investors, but just like owning the land, metallurgy is critical, especially when you're talking about an open pit.
Yeah, I mean, I think the progress of mining metals in general have now moved toward, having efficiencies earlier on was how you can efficiently mine some rock, and we've gone beyond that now to get better returns on your investment and better use of your monies. We were looking at metallurgy. Metallurgical processes are make or break mines, and if they're simple and they're well documented, and there are not too many steps involved, then those tend to be really profitable for the investors. So in this particular case, we have a deposit that has lots of oxidation. It makes the application of chemicals for gold and separating really easy, and it's in such a quantity, like in 90%, 95%, is fantastic. Now, if you had a sulfite deposit, you'd be using that same technology. You'd be getting in the 60% range. So you'd have to either move more rock, or you'd have to have higher grade to make up for it. So having these oxide deposits means you can actually mine very low grades, okay, because you're getting high recoveries. And these type of mines, these oxide mines, tend to be low capex and low opex. So you tend to be in the lower quartile in terms of costing and production, and that means that when you have a downfall, or that you can survive, and if you have an increase in the price of gold, that you make a lot of money. And so that's why these tend to be very attractive assets that for people to buy or for people to look for. So when I looked at becoming involved in the company in September, I really try to look at the metallurgy and if we can get those high recoveries, because then we could live with a lower grade, and the economics should be good at a lower gold price. So it's a key element that when investors are looking at companies, that they should look. Just because you have a gold mine and it has a grade and a tonnage, it doesn't necessarily mean you're going to get 95% of it. And so it's like everything, try to always ask the next question. What makes, mines aren't found, they're made. And they're made by metallurgical, they're made by great thinking about how to mine things. So, I tip my hat off to the mining engineers that have come up with these things.
Okay. Thank you, Paul. Guys, let's move on. I know the next one is permitting. We've had a few questions on permitting. Take us through what it's like to permit in Idaho.
Yeah, so this is all around our patents. Remember, the biggest advantage that we have when it comes to permitting is that we own the land outright. So what it means is that on a patented claim, you don't have to permit with the federal agencies, be it the BLM or the USFS. You permit at the state level. And that's a lot more straightforward and simpler, and your timelines are greatly reduced. So we're talking typical timelines here. As Paul said, we have an expectation that on the patented portion, we should get some really clear visibility on the patents, and maybe even objectives met within that 3-year time frame. And once you have a state level permit for your mining operations, which includes the processing facilities on the patents, it's much easier to get the federal land to be incorporated into the permits already given by the state. So that's kind of how you go ahead and permit these. From a standpoint of what we have to deal with, one of the reasons we got involved here is that it doesn't have any of these unsurmountable hurdles, such as a river running through it that has fish, or tourism, these kind of things. Also, we had a number of years of baseline studies and previous permitting done by Meridian and previous operators, where obviously the permitting procedures are outdated, but the baseline studies gave us very good indication that there aren't any protected species that were identified, archaeological sites, and other items that basically make things impossible to move forward. So we're in a good position when it comes to permitting. We do have to go through the process. We've got to make sure we do it well. We've got to make sure we take care of the environment, and that we are conscious and minimize the footprint. But it is doable, and it's possible in the time frame that we like to work.
Okay. Well, it's good to hear. Moving on, I guess, unless there's something you want to add here, Paul.
Yeah, I mean, there's just adding to I was looking at some of the questions that are coming through on my end here. Just on the financing and how I actually get involved in the program too, and that is in the first financing in September, that was mostly my financing that was done, and people are wondering about that financing. So I would say that my team and my associates and me took about 95% of that financing. That's just a question I had. Someone asked us on the.
Yeah, I see that. We'll get to some of these questions at the end. Let's just stay focused on this presentation right here, especially with the next slide, the comparables. That actually times perfectly with another question. So take us through these comparables, and we'll get into that.
Yeah, so it's comps are always these things that are kind of tough because nothing's exactly the same. But what we tried to do here was put oxide deposits together and ones that have a resource and that of course are in the public market so that you can actually value, right? So you got to imagine that there's not a huge amount of options there, and I don't think any of these have anywhere close to our grade when it comes to the ounces that we're describing there. But nonetheless, even with that, especially given all the growth that we have, you can see this huge upside. $129 an ounce just based on where we are right now is what we think is a fair value. That's the average. And I always say, we're looking at this deposit. I think as it becomes pretty clear what type of ounces we have, location, jurisdiction, grade, metallurgy, patented versus unpatented, permitting, feasibility, that we'll go moving towards the top of the per ounce valuation, because I truly believe that these are some of the more valuable ounces yet to be mined in the U.S.
So you're saying it's more of just an awareness disconnect here, because somebody was pointing out that comparing it just to Prime Mining, they have a market cap of over 500 million with a similar resource, around 1 million ounces, 1 gram in oxide. Idaho compared to Mexico, both favorable mining jurisdictions. So you're saying that more people just need to know more about this company?
Yeah, I mean, in essence, it's you're competing with a big audience out there every day, and Prime Mining, and I know the people behind Prime Mining. They're a fantastic group. They're very good at communicating their message. I think Pierre Lassonde, is the CEO there, so he's an amazing fellow. So it's a lot of it has to do with having exposure to these types of formats, these programs, to get the message out, and for investors to compare, ask questions, and and to make informed decisions. So most of it is just we started this process about a year ago. I started in September. So I think we've done huge progress. We've raised a whole bunch of money. We've got a drill on site. We've got our first maiden resource, and now we've got to communicate that effectively to shareholders and all the rest of the investment community.
So guys, let's talk big picture too, because this question keeps coming up in terms of, look, you've had a lot of success building up companies and then selling them. And you've even outlined the goal of getting to 2 million ounces here for a resource. Can you take us through who some of the potential buyers might be? Who are some of the large players interested in Idaho? What insights can you give us?
Well, I mean, I can't name names because we're under some confidentiality agreements, but there's a lot of mid-tier companies that are always looking to add to their resource base. They're near depleting their existing deposits, and they have a market cap and a share price, and so we would be attractive to those types. We're attractive to groups that are looking to agglomerate 3 or 4 different companies like ourselves to make a super company. So I started these processes never with anybody in mind, but just to keep working on making it attractive. Okay. And so that's the kind of work that, and the kind of process that we do is saying, let's get to a point that we convince ourselves that we can mine this. Okay. And, I'm here in Peru today, and, I operate a small gold plant. Okay. So I have the experience to actually put one of these into production. So, and it depends how, what usually stops me or makes me lean toward selling rather than building is because it's the cost of capital. And if I, were to try to raise the money for the mining and for the equipment, for the CapEx, I'd be getting the monies at, 20%, while an established developer or producer gets the money at 2 to 3%. So that 15% swing is a lot of money that I'd rather use toward giving it to our shareholders in a sale than to build. Okay, that's really what it comes down to. It's the cost of capital or dilution. You could say, well, I could just raise it on the back of my share price, but it's still dilution to the shareholder. And then there's the doldrum period where you spend 18 months or 12 months building your mine, where, especially if you're a single asset company, you don't have any other news but wait and hold. Okay, and so it's a difficult situation. So so that's why I was focused on what do we need to de-risk this thing, to move it forward, and to get to a point where either it reflects in our stock price, someone buys us, or it really reflects in our stock price, so we can get over the do it with a share instead of a loan kind of situation. So
okay. Hey, I appreciate the honesty there, Paul. You guys are working, it looks like, to sell this thing, but again, you have to do all the work and you have to build up that resource. When it comes to getting a mine permit, and I know that's way further down the road, because you're on patented land, do you still need to go through a feasibility study?
No.
No. Okay.
You don't necessarily have to.
It's much better to permit what you're going to build, do it with the fees and make it all line up properly, but it's not a requirement.
Okay, that's perfect. Yeah. That study just came in, so that's perfect. A couple other quick questions, then. Let's take care of these. Have you initiated any baseline environmental monitoring?
Yeah, we've been at it for a while. Yeah.
Okay.
We were lucky to have inherited a lot of that, so we're building off of everything. So we already had, certain areas identified that we had to revisit. We had wells, there were 11 wells, freshwater wells drilled. So we got piezometers down there, and we're monitoring. So that's all well underway.
Okay, thank you. Also, what's the water table depth below surface, and why is this important, I guess? Please explain that.
Water table depth. So we need water for processing and for mining. And you typically, in our area, they're on sort of this rivers, etc. But surface waters are usually not what you're going to get a permit from anyway. So the aquifers, the underground water that's at depth is key to be able to set down wells and pump that without affecting anything in the area. Surface water flows downstream down to the rivers where there may be fish later on. So we've these 11 wells did characterize that. The depth is anywhere from 35 meters to all the way down 100 meters below surface is where it starts. And there's a dry portion between the surface waters, which run because of rain and snow melt, and these underground aquifers. So there's a very clear differentiation between surface waters and the aquifer or deeper waters that we could potentially use.
Okay, awesome. Everybody listening, if you have any more questions, please send those in. We are nearing the end of this webinar, but happy to take a couple more. Guys, take us through the last couple slides then, please.
Yeah, I think we just had the rest of the board here. Again, it's a team that's done a lot of times before, led by Paul. Bassam and I work together also in Lithium X. And Simon and Victor are doing well also in the gold space. Vic is the CEO of Amex, and they've just started a great little company also in Quebec called Royal Fox. So, have very focused in the gold sector board and management here.
Yep.
All right.
Yeah. And that brings us to the end here, guys.
Okay, hey guys, just quickly wrap us up then. What do you want investors to understand? What should they be excited about as you move into next year with undoubtedly it sounds like a lot of exploration on tap?
Yeah, we have a large drill program on a growing resource on patented ground with a mineral deposit that's quite attractive to develop and can be done in a short period of time.
Okay, there we are. Hey, everybody, thank you for tuning in. Paul, Will, thank you for your time. Thanks for walking us through the story. There is a contact information there for Tom. If anybody wants to reach out directly to the company, you can also email me directly. That is Fleck, F-L-E-C-K, @kereport.com. I will get those questions answered for you, especially on the back of some more news out of the company. So I hope everybody enjoyed this webinar. Please keep sending in your questions and keep following along with Freeman Gold because there's a lot of work and news sounds like it's coming. Paul, Will, thank you again for your time today, guys.